I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now on Bootstrapping, I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world. Welcome back to tastylive. I am Dylan Ratigan. Time for another episode of Bootstrapping. My guest today, Joe Kurgis. Joe, the proprietor, or at least one of the proprietors of a company called Generator with an 8 in it. You can probably see the graphic for it. Generator, a platform to launch, cultivate, create, match all sorts of half parts and quarter parts and tenth parts from investors to artists to musicians to whatever, to generate entities, commercial enterprises that become businesses of some kind or products of some kind or services of some kind. And it's a fascinating undertaking, Joe, because there's so many of these parts out on the earth, whether it's people with money or people with an idea or people with a design or people with a patent or people with a what never ends. I'm interested in what you think, like what have you done, I guess, for everybody's sake, to give your background, and then why do you think you were able to blend the sauce to get these companies off in a way?
Well, we started 12 years ago as a love letter to home. My co-founder and I are from Wisconsin, the home of the Packers, and we wanted a way to enable our community to invest in its best and brightest. And so we felt like there were a lot of ways for communities like ours. I'm from Milwaukee. My co-founder at the time was in Madison, a university town. And we wanted a way to enable our community to catalyze the best of its mentorship and network, its resources, its buying power, its investing power into the best and brightest people that were emerging from each kind of class of talent.
Which is sort of like the sort of aspirationalist view of capitalism, right? The resources of the community are reinvested in the potential of the community, et cetera, as an intention.
If we're not the most passionate and excited about our own next generation, what does that foreshadow? We wanted the company to be a tool to enable us to invest in that next generation.
And so what was the result of that intent?
We created this program. It's the accelerator model. So it's well known, lots of accelerators on this show, I'm sure. And there've been this way of creating a competitive program where people apply, and then you take the top, in our case, 5 emerging individuals and companies who you think have the most potential. And we'd work with them for 12 weeks in the accelerator, where we would bring them on premise, and we would work to help get customers, to help them present to investors. And we had this culture of never self-defeat. So at the end of the programs, we would take all of our graduates to go out and pitch all the venture firms in Chicago and San Francisco and all around the country, so that we could get as much of that capital into our own hometown to build the next generation of companies where we were. And so it started just like that, in that Milwaukee Madison model. It's fast forward 12 years. I'm older. I'm a little more tired, but we have about 128 employees in over 40 cities, 20 states, and a couple countries.
And do you end up with an interest in the companies that succeed through the cohorts of your accelerator? Is that why you have so many staff?
We often do,
just to fund the accelerator support for the cohorts.
Yeah, so we have 2 models. So we do investments. So we have our manage a venture fund, and we post the performance of that. So we do take an equity interest in many of the startups through that fund. And the funds had a good 20% plus internal rate of return composite from 2012 to 2019 or 2020. We've more than fully returned all the invested dollars. So we're just working on returning from the funds currently investing. But then we also do programs on what we call a contracts for services model, where whether it be corporations or governments or foundations will hire us to run that same accelerator, where we don't take equity. It's that partner who's paying to bring those startups.
You're just selling the programming, you're saying, to basically to drop an accelerator on in a specific city or town.
Exactly. And that was one of our innovations. I think in the accelerator space, one of our innovations was to take that contracts for services model into a multi-city and multi-model format.
So if I wanted you to host an accelerator in Milan, forget the language issue. If it was all, you could drop the Generator program in Milan, as well as Tokyo, as well as Sydney, as well as LA, whatever, as a format that you would then you fly into service, or you Zoom to service, or that's your employees, you've staffed with people. I mean, is that what that means?
Exactly. Staff on the ground. It's funny you should mention Milan. We did a partnership with the Italian trade agency. We brought startups from Milan to the United States to meet partners here, and that was a contract for services program. So exactly. Mm-hmm. But we'll staff it on the ground with people typically from the community. And the idea is that we're replicating that mission of being the best partner in that community for them to invest in their own next generation.
So what are some of the interesting companies or products or services that you feel that you have that demonstrate some of your efforts to date?
Yeah, so I think on the consumer space, and when I'm out talking to people, the consumer ones jump out right away. So we have a company that called Pretty Litter. So if you have a cat, it's a founder. He was in Los Angeles, and he created a diagnostic around litter that turns the color of a cat's health. And there were some more innovations. He made it so that it was lighter weight through this crystal technology, so we could ship it instead of buying it at the store. And then Martha Stewart's now the main endorser. So if you ever watch TV at night, you'll oftentimes see Martha Stewart promoting better care for your cat. And that was a graduate. We were the initial exclusive investors in that company. But then, but many others, in
How
Chicago,
many companies total?
over 400 invested. And then through our contract for services program, GBeta, we have another 400 as well. So we're going to be over 1,000 in 2024 in terms of graduates and investments.
And what do you think is the secret to taking whatever it is or you understand or your insight or your partners and scaling it to hundreds of people and being a scalable service rather than a personal curation?
We think there's a design flaw in how the country's created its venture ecosystem. So if you're a venture fund in San Francisco or Chicago or LA and you want to engage with the best of the startups in Omaha or Oklahoma City or Fargo, North Dakota, what have you, right now, engaging with each of those ecosystems and the startups in those communities, it's like going grocery store shopping at 100 different stores for 100 different items. And we're trying to create a platform with Generator where any venture firm in the world can come in and see the best of what's in these unique communities.
And drive the best practices to its own domestic, whatever, or regional or community economy.
Right now, those communities are oftentimes left with kind of not-for-profit or parochial accelerators that are these one shop, one town models that just don't get the benefit of that advantage of scale. And just as much as they don't get the shoppers, like you're saying, they don't get the learnings that come from being in the game and learning how, you get a yes or a no, and what can you take away from that you can improve upon.
Mm-hmm. Okay. So what's the next, like, what do you envision the next 5 years?
We're in the middle of a pretty important fight. With the issues that we have in the communities we serve is that they're gathering their savings, and whether it be pension funds or university endowments, these large balance sheets, insurance companies, think of the tall buildings in any city. Typically, the people who own those are working those are managing large balance sheets. And in communities like ours, across the country, again, you can pick any, Indianapolis, Birmingham, you have this model where our savings are being exported to these markets. These
in New York and London and Hong Kong, you're saying?
Exactly. And we think that's driving a lot of the issues that the country faces, that we're using policy like the tail to wag the dog on. If we're not investing in our own hometowns, well, then whatever government policy we do to chase behind that is going to be lagging the broader issue of we've got to start creating new leaders, new companies, new jobs, and new wealth by investing in ourselves. And until we do, we whether it be national security or just the morals of it, we're not living up to our potential. But for a company, a Generator, we've got to convince these balance sheets by performance, by internal rate of return, and by scaling companies using those best practices, that they can succeed by investing in their own hometowns. Because right now the default is export that capital.
And what's your best evidence that your system works relative to other alternatives?
I mean, we try to be as transparent as we can. I mean, you were asking earlier, Pretty Litter, the public headline is it sold for under $1 billion to Mars. But in Chicago Provi, one of the largest companies, they're one of our graduates is a platform that connects wholesalers with bars, and you can order liquor for the next day through that platform. It's in 30% of U.S. bars. My joke is that's just Oshkosh, Sheboygan, and Milwaukee. But these are companies that are real companies doing tens of millions, soon to be hundreds of millions of revenue, and they have potential to be transformative. But we have to start by investing where we invested in those small checks. We publish our returns. So when I came in, I told you
your argument is that 12 weeks in the cohort system is a good vetting mechanism to improve the odds of a positive payout.
And more broadly, for a lot of these communities, the greater risk is not that they lose, it's that they just never play. And so the 12-week accelerator model offers them an opportunity.
Meaning to play itself is its own value, and the upside is a kicker.
The upside needs to be there. I mean, it's a little bit more than the kicker, but if you play, you'll get the upside.
Both have value. That there's a development of the enterprise value as well as the investment in the educational and community value of the accelerator itself.
Yeah, I mean, I think something that's different in the communities we serve that may not be the norm in the big cities is they need growth. It's not a granted. And so with the opportunity for an accelerator to come in, for every dollar we invest, you make about $3 to $4. But more importantly, we lever about $30 to $40 of outside investment into that same company, which is a lever to create wealth and jobs. And so we need to start getting these levers that are at that 1 to 20 or 1 to 40 rate, that we can start importing capital into our communities, or you're going to continue to see this breach where you have the big cities where income and cost of living goes up and you can't afford your house, or the cities like ours that we serve where there's not enough jobs and you don't have enough income for the house. But either way, you're seeing this
either way, it's out of kilter.
Yeah.
And so go ahead.
It's something that, it's not a small problem. And in the communities that we serve, I think venture capital would be about $100-200 billion industry. 3 to 4 billion is going into those places. But across race and gender, the dynamic is similar. You're talking 3%. I think for every one all-female led startup, like 30 or 40 all-male led startups got funded last quarter. And then obviously on Black and brown founders, the numbers are not there. And so we're really working across both place, race, and gender. We publish our statistics, and every metric we're around parity with the country, if not at or above. But we're doing it while maintaining that 21% internal rate of return. So we're trying to demonstrate there's a lot more potential to invest in the country than the current model, which flows through 3 cities, 1 race, 1 gender, indicates.
How long do you think you need a generational change in order to? If you're sort of the most fantastic future outcome is a generally more aggregate efficiency across all capital and all enterprise that is better balancing of the levers that you discuss, whether it's in Indianapolis or Milan or Sydney or Baltimore or other lines that are drawn, gender, et cetera, identity, et cetera.
Yeah, we need it.
I mean, how far, if the distance from there is 10, let's say, we're at 0.
Yep.
Even but just at 0 is just the mark of it's X marks at you're at X. X is where you're located.
Yep.
And then the distance between where you are and 10.
Yep.
I mean, in your lifetime, half of your lifetime, if we use your lifetime as a metric.
Yeah, that's a great question. We were looking at our metrics going back, so I don't know, but I'm going to give you my best hopeful answer. When we started our first year, I think our graduates raised $1 million. We did 5 or 10 companies, depending on if you do the year or the 12 months. And we were so happy that they raised, because you're dealing with these 24-year-olds with trash can dreams, and you're thinking, is it crazy but not self-aware to expect you to build a $50 million company with a $20,000 check? And so to see this power where you invest, and now I think of our first 60 investments, 6 crossed $100 million valuation. We have this deep conviction that if you invest early in the emerging talent in your community with a deliberate model to connect them to talented and smart people and customers and employers and mentors, that you can do more than you imagine. So I want to fast forward 12 years. Now we're in this 40 cities, 125 employees, and you're humbled because of the scope of the problem you described is in the hundreds of billions of dollars. But I want to go forward to, in our 12th year, our graduates raised hundreds of millions of dollars in a down year, in a lower, much lower market, and created, hundreds, if not close to about 1,000 jobs. And so I don't know 10 years out if we're going to be able to maintain that same differential between, $1 million raised in 1 year to 250 million plus raised in 1 year. I don't know if we can do that, but if we can, then you're thinking, okay, maybe if we can get to 2.5 billion or 3.5 billion raised in a year, in a system of $100 billion, at what point do people start to notice? Is it 10 years? I'll be 50. I'll still have time left in my career. Is it 10 years after that? I don't know. We'll never get there at all. But that's, as entrepreneurs, that's the binary sort of outcome you sign up to chase, I think.
Mm-hmm. But the point is, you think that every city in the world, all the tall buildings of all the regional cities on Earth, could be using this system in your lifetime.
We've gone
from Thailand to Bombay to Johannesburg.
Those sound big. Yeah, I mean, if you look at the accelerator market, really, it's been, Y Combinator taking the Valley, Techstars doing markets kind of 2 through 10.
And then Boston. I'm part of a startup that went through a cohort in Boston, thus my desire for my teleportation startup. Yeah. So I'm familiar with the whole cohort situation. So
I didn't know we were announcing the teleportation startup on the podcast, but
I like to just drop it in conversation as a given. I don't want to make a big deal about it.
But the context was for people who are listening, a lot of the Tasty Trade workers are in Chicago, and we were saying we could teleport them to Wisconsin and they could experience the joy of winning. But the
Ouch. Oh, I mean,
yeah,
I have to defend the Chicago crowd here. I'm sorry, Joe. We may have to part ways on this issue.
that's all right.
I
It's
have an
okay.
obligation
But
to the Chicago community
but
to
you know,
not just take that.
going to
Even
Boston,
even if
Chicago,
I'm an interloper from New York, just out of loyalty to Tom.
or just solidarity with the Aaron Rodgers issue, I could see that too. Um, but
Now you're going to try to walk me off
uh,
a plank.
yeah,
Listen,
yeah. But I mean, it's not, those cities actually sound big to us, you know, that in markets, we're really markets 11 through 50 in the United States. So we're much more likely to be in San Antonio and Oklahoma City and in Minneapolis, where, you know, they're still doing a couple $100 million a year in annual venture capital, but nothing like the tens of billions that you'll see in the major markets. So that's been where we've been focused. And there's a lot of
and
cities.
that's where there's the most value for your offer. That's where it's most valuable.
And you mentioned Milan. You know, Milan's in the north of Italy, where it's a big hub. You know, I think there's a 1.7 trillion dollar economy in Italy. There's about 60 million people, and in 2020, I think it did less venture capital than Minnesota. And if I'm wrong, I'm off by a little degree.
And
But
the culture is desperate. If there's one place in the city, it's in Milan. In the country, I should say, it's in Milan, where
Milan,
there's enough energy to actually take action to resolve the issue that you just described as a challenge that can be transitioned. There's a depth. That's the only place.
kind of going to our models thinking too, but I'll go about 50 kilometers, 60 kilometers maybe away from Milan, I think is Bologna in the
Sure.
Emilia-Romagna region, which has one of the largest universities and the oldest universities in the world.
I would say, I think they would say the oldest if you were to have the meeting, but I'll have to represent
exactly.
them now.
But it's about the size of, I think, about 2 or 3 Big Ten schools combined. And so
Yeah.
you're looking at, and it's the home of the valleys there, Ferrari, you know, a lot of manufacturers. So there's a lot of
very good meats.
Yeah. Oh, I cooked the bolognese from scratch. Trust me, I'm with you. Teleport. We should teleport to Bologna.
We should teleport for dinner in Bologna tonight.
Yeah, that would be a brilliant idea.
Teleportation solves all our problems. We don't want to get into it. We'll reveal it as a big surprise.
I feel that we'll be there with the person when we tell them. Yeah. Yeah. But that's where I think for us, we did expand into Europe this year with Luxembourg, which is kind of a gateway into the rest of the ecosystem. It's 2 hours away by train from Paris and Berlin, but you kind of get to your thinking of, you know, there's a lot of cities out there that Luxembourg
probably. And Europe, it has even more of a reason to invest in the increasingly small group of young people to make them as productive as possible to get over the age gap on the continent. So their only way out is to leverage the 20-year-olds that do exist, or the 15-year-olds, or the 25-year-olds, or whatever, the 80-year-olds. But the inner creativeness of people that exist is their only chance.
And I think the other thing in the accelerator space that, if I had to guess where it's going, is the single biggest predictor of where, if you look at the top 10 accelerators in the world, the single biggest predictor of where they're located is which side of the equator.
There's almost for sure that. But that's a different meeting. I mean, that to me, I think that that's a different meeting. I mean,
but one of the things we're trying to encourage around the United States is, we think any community could compete on this, is just go and affiliate with an EB1 program, which is like a program to help people get a visa to work and live in the United States. And the universities have some cool programs around how to kind of co-employ, other things like that. But I think any community in the United States could basically put out a shingle and say, we want to be the next best stop for immigrants to come in and build a startup and compete with a relatively small amount of venture capital to attract these international founders. Because as we've worked around the globe, the thing we see is they all want to have at least their office, if not themselves, in the United States. And yet across the 40 cities that we serve, there's no one player.
What about Tempe, Arizona? Arizona State seems a good option for an American immigration hub.
Especially the universities, it's going to be, I mean, imagine if you're pitching it, you know, would you rather be pitching that or somewhere in the UP, right? I mean,
that's all I'm saying. Seems like a good option.
Right. But maybe the height, I know you want to get low enough to the ground.
You got to worry about the altitude. You got to check the altitude before you sign the papers.
Exactly. But you get the idea that's the sort of thing we're trying to do, innovations like that in the country where, you know, how can we help do these innovative new products that maybe a community that feels like their angle is going to be importing the next generation.
But what about Central America or South America or Mexico or Honduras or Africa?
I mean, I think you could.
North Africa.
I did a survey of accelerators, you know, the top brands and where they've put their accelerators, and there's less than a handful across the places you just mentioned, like less than a half dozen total, maybe even less than 2 or 3. That tells you how much opportunity there is in terms of how underserved those populations are, how willing they might be to come to a program in the US, how much they want a program like that in their community where you can make a profit investing in, you kind of do well by doing right, by investing to make a profit on the dollar you've invested, but then also catalyzing that lever to import capital and jobs and wealth into your community. And it's shockingly
you restructure the wires of the system to everybody's benefit, and in the process stabilize the foundation of decision making in the society.
One of the things I was most proud of with our team that they did in 2022, right, in response to the COVID crisis, was they organized an event. They called it Lightning Rounds, where they had, this was all their idea. They had 150 venture firms that wanted to invest in Black and brown founders. Some had a dedicated thesis. Some were just wanted to meet startups, and brought in about 250 startups and did, I think, 850 meetings in a day, just virtual, having these people connect. But it's been, I think, one of the most shocking things in my career is how little the connective tissue that finances this actually gets distributed around to these different communities, and how little facility there is to get that one-on-one connection for emerging talent outside of those hubs. And once you do, people are smart everywhere.
Exactly. And there's tall buildings everywhere.
Tall building. Well, not everywhere, but yeah, pretty much, especially once you teleport.
Within 500 kilometers, there's a tall building, yes, with the exception of some of the continents.
Exactly. Yeah, exactly. And so you have these balance sheets that could take an interest investing in their own community. One of the things that's really shocked us is,
and with an incentive to be efficient because of its smaller size. Sorry to interrupt you.
Well, you think there'd be a home court advantage, right? You'd think that you would have the most to gain by investing in someone.
I'd rather get 1,000 to 1 than 10 to 1.
Yes, and we've been shocked. I think one of the things, now I'll get a little off script here, but the foundations in the communities that we serve will oftentimes have a stated goal of creating a facility to bridge wealth gaps, especially then you'll go and see
as a mandate for the fund for the
Yep. Then you'll go and see their balance sheets, and the most common fund manager for the foundations and endowments and nonprofits in the United States, the most common fund manager, you can go to their website, and if you do a little research, you'll be able to get their name and figure it out. And their DEI report, I think it was for 2020 or 2021, indicated only 96.5% of their funds were managed by white men. And that's the fund manager for all the foundations in the world. There's no data on place. So most of the foundations,
it's got to be New York, London, or weird addresses that are offshore entities managed from New York, London.
And they're coming into our community in this kind of moral authority to tell us how they're going to be using this wealth to create and solve these problems. And they're putting
running the money to New York.
And they're putting a couple pennies on the dollar of the return back in the community, while the dollar of investment, which is a much faster, more effective, more, kind of intentionally put dollar, in my opinion, many times, is out there.
But I'm going to stop and say, because I've been in a cohort, and I have another friend of mine who's the CEO of a company in Italy that's a big materials cohort. They do aerospace materials. And so I've been through some cohorting myself, and I would just like to say that it's quite difficult and very demanding. So it's not a small process. We kind of skipped through this cohort 12-week situation.
Oh yeah.
But that's like a real situation.
Yeah, I mean, when they come through, I mean, to go to your point, when companies are coming through in the program, to meet the requirements to be a venture-backed startup, you typically have to grow in the span of 5 to 7 years from zero to, at least maybe $10 to $15 million, depending on the type of business you have. And, the rate of growth over 60 months to maintain that, to go from 0 to 10 or, whatever that is, 800,000 or 900,000 a month, you're looking at real fast growth. And so within the program itself, the model that we're trying to facilitate for these founders, you have to think about how you're going to build your initial team. And it's like, the way I describe it, it's like putting in infrastructure. For 3 months, you lay a bunch of pipe and road. For 3 months, it works really well. For 3 months, it doesn't work that well. And for 3 months, you rip it out and you repeat the process the following year. And so for these founders to have to go through and, get their company built, their product built, to get the first customers and to maintain a rate of growth where you're using dollars from investors to grow, it's virtually impossible. And so the environment is, as you mentioned, the environment is not for the feeble-hearted.
It's brutal. which makes me question the future of my teleportation startup, which is largely conceptual with a little bit of citation and
Oh,
evidentiary matters to
oh,
support the undertaking.
oh, Dylan,
And I
don't
do
talk
have
about
access to some of the laboratories in
it.
Boston to do some subatomic experimentation to validate some of the assumptions.
Dylan, don't talk like that. You're this thing is going to work. And again, the culture of never self-defeat is the thing that we put in first. So again, until we're here together with me or with you or with the vice versa, I think the teleportation thing has just got to be top of mind.
Okay. So basically, if you're not working on teleportation, you're not really working. Will become our new mantra.
I think you should have that as your mantra, and I'll support you because I want that to be
Okay.
your brand.
Okay.
Yeah.
That's right. I'll take yeah. I will say if I'm not working on teleportation, I'm not really working.
I'll take it. I'll take it.
And you're with me on it. And if I can come to you once I show up at your dinner table, you'll know it worked.
Yeah. And it's the sort of thing that you don't believe it till it's happened. But I'm with you. So but again,
I think the Tasty World would fund my teleportation startup. I'm going to make a research project because I want to do a subatomic experiment where you take a pre-vibratory quantum particle in some sort of a string theory basis, and then manifest anything. I don't care. Nerf ball, subatomic Nerf ball. Vibratory transitions to manifestory. Anything. Foam dot. I don't care.
Yep.
Then I project that vibration to like Tokyo.
Yeah.
And then I manifest the same foam dot in Tokyo.
Yeah. And have you ever been with people who talk about the universe and how they're manifesting an outcome to the universe? I think it's a precursor to what you're describing.
Well, I'm saying it's where physics meets sort of Buddhism / sort of manifestory sort of philosophy.
Well, that
scientific theory.
Wasn't that Einstein's theory of time? Was that basically if there's a big enough, depending if you're moving fast enough, and there's a lightning strike, that it'll appear to someone who's moving further away sooner than another, and so time will be separate to two different people at once. But I mean, you're touching on topics that my understanding is Einstein really foreshadowed. And I think what he's saying was start the startup, Dylan.
Yeah, well, I think you're right, and I think that if you're not teleporting, you're not working.
Yeah.
If you're not working on teleport, I got to act like a man who already knows how to teleport, who's just trying to remember.
All I know is that if there was a lightning bolt right now, I bet you'd see it ahead of me. And that's because
it's also like who is the artist? Michelangelo, where the sculpture is already exists. You just have to reveal it from the stone. Teleportation is already there. We just have to allow it to be.
I think it's what he was really trying to say when he said that too. So I love it. If that's not a reason to go to Florence, what is?
All right. Well, I will conclude. I guess we'll call this an interview. Joe Kyrgyz is the boss at Generator. How do they go visit you? How do they submit to you? What's your
generator.com? There's an apply now button like every quarter into that website. So you just find something and contact us and we'll contact you.
And how many cohorts a year are you running now between these 40 cities?
It'll be over 60 cohorts in 2024, probably over 70.
And 5 companies in a cohort.
Yeah, we maintain that 5 companies. We want to make sure we get as many of those graduates funded as possible. So we started as and remain one of the smallest cohort models in the world for our industry.
I'm Dylan Ratigan. This has been Bootstrapping. More Tasty Live after this.